Yes, welcome to Price Action Real Traders. Today I'm going to show you how to identify engulfing zone in ranging market. This is part 1 on how to identify engulfing zone in ranging market. So let us start. So let me show you so that you will understand very well. So what do we mean? Let me tell you about trending market first, then I will explain the ranging market. So market is creating, is going like this, like this, like this, like this. So here, then this is your EMA. Here is 200. Then here is 100. Then here is 50. And here is 20. And the price is below 20. So this is the strong trend. Here 200, 100, 50, 20. So this is a strong trend. So in strong trend, assuming here is your zone, this is your zone, sorry, this is your zone in strong trend. If it is your zone, so as soon as market touch this zone, you see rejection, you can place put option. This is another zone, market touch, you see rejection, you can place put option. Market touch, you see rejection, you can place put option. Market touch, you see rejection, you can place put option. This is in the strong trend. In strong trend. But in ranging market, you can still see the market mode like this, but the element is of EMA has changed. So let me show you what does that mean. So I zoom in here. I will explain the ranging market now. So you see market is going like this, even though lower low, lower high, lower low, lower high. So then your EMA, you see 200, something like this, flat 200. Then you see 100 crossing. And then you see 50, you see 50, sorry, you see 20, something like this. Then you see 50, something like this. So this is the ranging market. So in this mode, you will trade only if market close here, assuming this is the zone. If market touch this zone and reject, you wait for market to close exactly here, then you place your trade. Or market close here at the zone, you place your trade. Or market break the zone, then you place your trade. Close, place your trade. Close here inside, place your trade. Break, place your trade. Close here, place your trade. Close here, place your trade. Break, place your trade. Don't trade if market touch here and reject, then you place. No, don't place trade, but place if market close here, but you see the candle has rejection on top, but close exactly here or inside here or breakout, then you place your trade. If you see the EMA is 20 is flat, or 100 or 50, or they are crossing each other, or the price is between one of them, all is ranging market. Even though market is like this, it's still ranging. It's like this, even though market is like this, going like this, is we are still in ranging mode. If the EMA are crossing each other or are flat, some are flat, some are crossing each other, so it means you are in ranging mode. So let me show you what does that mean. Let me try to take one live trade so that you will understand. So let me try to take one live trade so that you will understand very well. So like here you see, you are arranging market, you see flat 200, you see 200 is flat, and this one is crossing each other. So here you are arranging market. So here you see, this is your zone here. You see here, this is the engulfing zone here. Sorry, here is the zone. And you see market close or reject, then you can place your trade. Don't place touch like this one. Like this one. If market touch or reject down somewhere here, don't place put option. You wait for market to close inside or here, exactly here. Then you place your trade. Then you wait for the breakout as well. Then you place your trade. So that is the way that you trade ranging market. So let me try to check very well here. Here is strong trend. You see here is ranging market. You see market, this is the zone here. You see zone here. Here is the zone. And you see market break the zone here. Then you can place your trade put option here. You see I place my trade put option here because of this flat 200 EMA. I know definitely market must reverse here. So that's why I place my trade because of the ranging market, and here is the zone. You see this is engulfing zone, market break the zone, and then you will place your trade put option. Why? Because of the ranging market. We are in ranging market, so as soon as market break the zone or close at the zone, then you can place your trade. You see here, you see here, you see 20, you see 50, you see 200 and 100 together, and here is the zone here. Then market break the zone because the EMA are crossing each other, so our market has break the zone, so I know definitely market must reverse. So that's why I place my trade with confidence. You see very strong trend. Why? And you see 200 here is flat. You see 200 EMA. You see 200 EMA is flat. You see 100 as well is flat. You see even 50 is flat. You see, and the price my is above 20 here. So this is the ranging market. This is the ranging market. So here you can place your trade if market close. Don't place if market touch. In this mode you will fail. You have to trade close inside or close at the zone or break the zone. Let me check another one. So you see here is ranging market. Even though you see this downtrend, it's ranging market. It's not downtrend. It's not strong trend here because of the alignment of the EMA. It's ranging market here. So in this situation, you see here, this is the zone. Here is the zone. You see here, this is the zone. So don't place your trade like here, market touch or reject. Don't place your trade. It's very, very dangerous. You wait for market to close inside, you understand, or break or close here, exactly here. If market close exactly here, you can place your trade. If market close inside, you can place your trade. If market break, you can place your trade because of the ranging market. Flat 200. You see 200 is flat. So you see here, so you see market close inside the zone. I will place my trade call option, but you see bad entry point, but no problem, it will give me winning trade. So you have to be very careful. Sometimes it can give you bad entry point, but it must give me winning trade. So this is the way that you will trade ranging market. It's very, very simple, but you have to be very careful with the entry point. But because of this plus 200 EMA, this candle must be strong. Market is doing panic, but it must close above my entry point. So I'm coming, let me answer call. So you see, I told you it must close above my entry point, even though it has given me bad entry point is my network. I placed my trade here, it took me up. So but in ranging market, you see plus 200. So that's why it's ranging market. So you can trade only if market close inside. Don't trade touch. Trade if market close inside the zone. Don't trade if market touch the zone like this. Market touch the zone and reject, you place call option, is dangerous. It may work, it may not, but wait for market to close inside, then you can place your trade. So this is the way that you will trade ranging market. First of all, you must see one of the EMA is flat, you see, or some of EMS are flat, you see. Then you see crossing of EMA, means you are in ranging market, you are not in strong trend. So don't trade touch, trade close at the zone, close inside the zone, break the zone, then you trade a ranging market. You see here you are in strong trend. So here if market touch this, you can place your trade call option. As soon as you see market touch, you can place. But in ranging, you wait for market to close here, or close here, or break, or close here, then you place your trade. But don't place your trade if market touch in ranging market. Here is strong trend as well, strong trend. But here you see this is ranging market. So here this is ranging market. This is where I took my trade here. So here there is no zone here, no any zone. You see here, this is ranging market. You see, this is ranging market because of flat 200, flat 100. You see, most of the EMS are flat. Then you are in ranging market. So here you will trade if market close at the zone. So now here, if market creating engulfing here, it has already created here, but this candle is together. No, here this is the zone here, and here. So these are the zone. So in this zone, don't trade touch. Like here you see market touch, reject. So don't place your trade call option. It's dangerous here. But if it is in strong trend, as soon as you see market touch like this, you can just place your trade. But here it may reverse. And here you see as well, this is the zone as well. You see here, you see market is reversing. As I have told you, ranging mode is very dangerous. You see here, so market close inside, but it's very fast. I would have placed my trade. I'm late. You see market, you see this is the zone here. Market break the zone, close inside, then you place your trade call option here because of ranging market. And now you wait for market to come to this zone here. If market close inside this zone or close here exactly, then you can place your trade. You can see on how to identify engulfing zone in ranging mode. You have quick opportunities, and you will not waste your time. You will not take long time before you take any trade. Anywhere in the market there are opportunities, especially if you are trading in ranging mode. So this is the end of this video. If you like this video, or if you have any question, or if you have any suggestion, please drop it in the comment section. If you didn't subscribe this video, please subscribe it. If you didn't share with your friends, with your family, anybody that you know is trying to know how to trade binary option or forex trading, please try to share with him so that he will get good and easy knowledge to know this market very well. So I will say thank you. Bye bye.